Let's start out with a look at some key levels to watch today. For that, I want to welcome in Kevin Green, senior markets correspondent here on the Schwab Network. All right, KG, when you are looking at the S&P 500, what levels are you paying attention to here at the open?
Yeah, so on an intraday basis, the upper end of this potential resistance area that we could see for the market is going to be around 61.40 to 61.45. There is actually a pretty interesting trade that an individual has been placing here over the last couple of trading sessions, and that's really where that call side of this condor that this individual wrote is really sitting at. So 61.40 area of resistance, intermediate pressure area where we could see a little bit of a bounce, 6100. If we do see a fade, 60.90 to the downside here is what you really want to be able to hold. But Diane, I mean, we have seen a pretty significant drop when it comes to volatility on a relative basis here. And we continue to work on the news flow, and the news flow has been the driver for this week as we have had lack of economic data. Now, we will get some data points here in the coming minutes that will be interesting. If we look at existing home sales, we'll have an update when it comes to S&P global PMIs, and then we'll have the revision for University of Michigan sentiment data. Let's see if that's going to be enough to try to continue to break us out to the upside here. But on the longer term time frame, if you're kind of looking at the technical setup, we are at a breakout point, and from positioning, there's nothing that's really has been built up between these levels right now and 6,200. You can make the case that 6,150 will be a little bit of a challenge here, but we do have a little bit of a void when it comes to positioning. Now, next week could also be a driver or a catalyst for us to the upside if we get the economic data to kind of support that, and if the Fed comes out and really maybe matches a little bit of a Waller kind of stated about a week ago when it comes to the interest rate cutting trajectory in the market. So nice little technical setup, not a lot of positioning to the upside here, got a little bit of a void. Let's see if we're going to have a continued follow through after the breakout yesterday.
Not a lot of triggers, it seems like, for today. It seems like it really has been kind of a headline-driven week. Is that the expectation for today, or could some of this economic data act as a catalyst?
I'm not sure how much. So S&P global PMI data is not a really big market mover, but it will be an interesting one. And you want to actually kind of see positive data coming from the manufacturing side, which has been in contractionary territory for almost a year and a half now, going on almost 2 years. So any type of optimism there, I think, would actually be a direct boost to the industrials and materials, which have been moving to the upside really aggressively and really nicely here. University of Michigan, that's going to be a revised statement. So on the bullish side, what you would like to see is actually a move to the downside when it comes to the 1 year inflation expectations. Market is looking at that coming in at around 3.3%, but anything below that probably could also give us, once again, a nice little boost to the upside. And then existing home sales, we do have an outsized number to the upside there. That also can bring some optimism. It's kind of counterintuitive because the consumer will be obviously doing more deals, and that could also give you the sense that maybe inflation is kind of getting higher. But if we have an increase in existing homes hitting the market and you see buyers kind of stepping in, that could also put a little bit of downward pressure when it comes to prices, provide a little bit more inventory, and that could also move us to the downside or try to crack the shelter component for CPI. So there's kind of a different trend there. So if you see a hot number from existing home sales, that could also be a pretty decent catalyst for us as the market really tries to digest that and look at the logic with that number.
And then what are you paying attention to in terms of levels when you compare the S&P 500 versus the S&P equal weight?
Yeah, so it's very interesting here. Obviously, we've had this trend where the equal weight has been outperforming the S&P 500 over the last week or 2 weeks here. But what's actually very interesting, this is a 1 year daily chart looking at the equal weight versus the S&P 500. And at the lower end, we have a ratio chart where the SPX is the top, and then SPX is equal weight is the bottom. So basically, that line going down means that the equal weight has more strength than the S&P 500. If it moves to the upside, it means that the S&P 500 has more weight than the equal weight or is outperforming, right? What we have seen is this nice little flag pattern as we have bottomed out where the equal weight has been outperforming, and that just means that broadening of the market is actually getting better. And this actually resembles what we saw in August and between August and October of 2024, where we could have this additional ramp up where the S&P 500 starts to kind of balance itself out. Mega cap names get a little bit more flows, and that's where you can see this push to the upside. That also aligns with the fact that, once again, we don't have any big major levels of resistance between now and 6,200. So I'm keeping that one on the radar. You don't want to see too much of an outperformance for the equal weight. But I think this pullback that we had and this reassessment or readjustment in prices for a lot of these technology companies for the most part, probably gives us a good foundation for us to continue to push higher. And if we do see any type of vol spike, I would suspect that Mag 7 probably will outperform the equal weight S&P or in a lot of these sectors, just because of the fact that they have positive free cash flow, and also because of earnings season, which is going to obviously has already kicked off, and we'll get some of these Mag 7 names over the next couple of weeks here.
All right, KG, we were just talking with our guests about some action within fixed income and levels to pay attention to. I know you've got a 10-year micro chart. What are you paying attention to there?
Yeah, there's an interesting development. If you're looking at the 20-day, 4-hour chart, we actually have this inverse head and shoulders pattern kind of taking place here. We have the left shoulder, we have the head of this pattern, which is kind of going a little bit lower when you're looking at that level of yields at around 4.5%, give or take. And now we have the upper end of this right shoulder that might be forming here. And if we have any type of meaningful breakout to the upside, that could mean that yields might try to reverse and move higher. So I'm keeping this one on the radar. Obviously, a lot of economic data once again next week can push these yields, but the interesting technical setup right now kind of says this might be a little bit more of a make or break moment where we have a retracement to the upside for yields. That would not be good when you're looking at the equity complex as a whole. Depends on how the steepening goes, but this one kind of shows that, hey, we might actually be seeing some higher yields on the horizon over the coming trading sessions.
All right, today yields little change. Thanks, KG, for the deep dive on the action with regard to the 10-year and broader market levels to pay attention to. That's Kevin Green, Senior Markets Correspondent on the Schwab Network.